Alright, welcome to another video today. Today is the 22nd of December. I made a short video this morning before I left for church, and that video was just to get you guys prepared for what I'm going to talk about today. So today we're going to be talking about, today we're going to be talking about everything I have learned within the past 1 week. So I actually started this journey on Sunday last week. Though I posted my first video, I think it was on Tuesday, Tuesday or so, but really started this thing on Sunday, and I found a way to download videos from YouTube. I think a lot of people already knows this. You just go to savefrom.net and you put in the link for the video and you download it. So I was able to download some videos of Ayo, all 12 of them, and I've watched 1 to 4. I was watching number 5 today. It is not the first time I'm watching these videos, right? It's not the first time I'm watching these videos. I've been watching these videos for the past, I think it was exactly a month after I released it. I started watching. I watched in September. I was trading GPP, JPY with it back then. Then I went off, you're learning a strategy 1 minute. The next minute you are chasing another strategy. And, that was when I saw Bernd. The first time I saw Bernd Skrupinski. So I just, I switched a little bit just to see if I could learn what Bernd was offering, but I quickly got to realize to learn what Bernd is offering, there's no other option. You have to go to his mentorship. Like you have to register for his class, the online trading campus, and I tried registering, but the amount of money it requires is way above my budget. Like, in fact, it's not even just the budget, it's way above my entire earning capacity for now. For the whole thing I saw this week, this week I got my head racked, like really racked, because it's not trading. I didn't take a trade. I didn't even place any trade, not them, not anyone, but I noticed I got to watch some videos, and I really value Bernd Skrupinski. Like, I really look up to him a lot. He's somebody who is not just talking about trading. He's somebody who is actually trading and showing results of him trading properly, not just those MT4 results that they'll show you on the phone. No, he's doing it in a prop firm for that matter. So it's clearly saying this guy is trading and this guy is really doing what he says he does. And he made some comments this week that really rocked like it rocked my apple cart. But when I think about it, I'm not really an ICT trader. Like I said, I'm not an ICT trader. I don't know how to trade ICT. I tried learning ICT concepts, and for some reason I couldn't really grab it. And after a while I realized the reason why I couldn't grab it was not the concept itself, it's the person. The guy doesn't know how to teach without rambling. I'm not trying to point him as a bad person, but it's a fact. He doesn't know how to teach without rambling. So I decided to learn a little bit from other people. I've learned from Dodgy D, it's an ICT, Sapiko, but it just wasn't making sense until I met Ajo, and Ajo just made it work properly for me. So, but let's head into what I saw this week. So I'm going to put up some video. I don't know if this will affect fair play, but I just want you to watch this short clip of Bernd.
Why would you believe someone who faked trading statement?
What if he did, but the strategy that he's teaching, you have found profitability with?
And again, you said he's teaching concepts. Every strategy in the world sometimes works. I'm closing my eyes, buy, sell. I make money sometimes, but not consistently, month over month. And the prop firm space is confirming that. I know the statistics, how many fail, how many get to the first hair. It's below 1%. And most of these people, what are they trading? ICT.
Yeah, so like I said, ICT is like it's a gun, literally a gun. I don't know if it's because of the concept itself or because people do not really understand the concept, because a lot of people come out saying, I learned ICT, I'm learning ICT, there's a strategy, it works. Some strategy works. Every strategy works in this market, and I think the best way to go about this thing is to go about the one that you feel most comfortable with, and then just stick with it. There's a strategy for everybody. There's to retreat. Use just trend line. I don't think I don't think Byrne will value trend line at all, but she uses it, and you can see her really hitting, like really hitting good. There's other traders. There's a lot of traders. There's Kimmel Trading, the guy that even asked the question. He is also a trader. He makes a lot of bank, like lots of bank. So there's another video. I want us to show you another one. I hope it's just some seconds of the video.
Charts. Any other gaps, especially those that are predicted by a free indicator or those fair value gaps on the spot charts, which by the way I like to call fake value gaps because they have nothing to do with actual CME gaps. All of these are honestly a joke, completely irrelevant from the real thing. The only gaps that matter are those gaps seen by institutional traders. They trade them, fill them, and push the market either toward or away from them. And like I said, these are only available on the CME unadjusted charts.
All right, so for those of you who think fair value gap is nice, for those of you who think fair value gap is bad, you could leave a comment in the section below. I want to see your own opinion. I want to hear your own opinion. I want to understand. I want to see where you get it from, how you think of the market. If you think Forex is still gambling, I think you could also still drop a comment there. Whatever you want to say, you could drop a comment. I'd love to see your comments. There it is, like two huge guns this week. Was it this week? I think the first video was on Words of Wisdom, and it was like weeks ago. And then this one was just yesterday, 1 day ago. So you can see how like very on fire this nigga is. He shoots like he's shooting, but it's all cool. It's all cool. I kind of like Byrne. Byrne is one hell of a bad guy, to be honest. He's a real good trader, extremely great. Like I want to show you something on his page. Let's just head straight into his page. I want to show you something real big. This man paid out. He got $275,105 for the month of December. That was 19th. That was like 4 days ago. 4 days ago. How many people in the trading space make this amount of? How many of your Forex gurus ever come out and say they made this amount, drop their FTMO or whatever platform they trade on like this, and are so freaking open about it and fearless when they say it? You could go verify, go check, go do whatever. And if you actually go to FTMO board, you'd find this man literally playing at the top of it every time, 120 times. 120 times. Top leader. You like I think every other Forex guru should just chill. They should just chill, get a life, go down there and go prove him wrong, because man, this guy is breaking records. But anyways, that is all for Byrne for this week. I think everybody should stick to their strategy. This is his strategy, and the way he sees his strategy is superior to him. For him, it is superior because it works for him. There are other people who use other strategies and they work for them, like Q Banks. You won't say Q Bank doesn't know his own strategy or his strategy is total crap. It works for him. Okay, there's the retreat, his trend line. It works for her. You would not absolutely say it's total crap because it's working. You can literally see it. She's moved from wherever she was to NYC now. Pays abuse towards everything for the past how many years of her life. A lot of things like this. So I don't think you should make your strategy superior to every other one, even though your strategy is like the one that came in years before. But it is not like completely superior because things change, things happen. You're good, you're cool, you're good at what you do, and there are other people who are also good at what they do. That's the way I see it. So back to the learning curve. There was something very inspirational I saw on Words of Wisdom also. It was actually the very proper, like the very full video of where the if you trade consistently talk came out from, like the full video. But there's just a particular part of it I want you guys to watch. It was a question thrown.
Get it in 6 months, but to get there as smooth as possible, based.
So
I guess we'll.
I think Zach, ask the
Right.
question.
What would you do, or what steps would you take? And this goes for everyone, so I guess we'll call you first, so I apologize. But what steps would you take to try and get to your position, not as fast as possible, like, get it in 6 months, but to get there as smooth as possible based on like everything you've learned, all the lows and highs that you've had, etc.
Yes, there's a lot of things to say. I'll keep it brief. Number one is time horizon. Like being realistic with that will help a lot. If you're trying to make it in because you got debts and you're working too many jobs and you're stressed financially, and trading is the solution that you've chosen, and then you're trying to immediately chase, that's going to be a headache. I think trading in a situation where you're not financially stressed helps. So first of all, set up your life. So if you have debt, clear your debts first. Don't worry about trading, come back to it. If you're on the poverty line or you're paycheck to paycheck, solve your financial situation first. Because if you're trading from a place of desperation, it will always be harder, especially learning. Learning is a whole journey in itself. So solve your life first, and that's going to be there's many ways to do that. Trading is not the easiest, I don't think.
So basically, let's just cut it right there. Basically, what he's saying is this: it's something I thought about a long time ago before I came in, before I started making these videos. It's something I thought about. So at first, when I came into trading, there's this dream that comes in trading. Trading is this dream that says a lot of people portray this trading thing like you come in here, you're gonna make money, you're gonna make bangs in minutes. Like you see those 5-minute charts where you see them post videos, living lavish lifestyle. Maybe they're in front of their Porsche, Camaro, Ferrari, and the rest. They'll sit down in front of the cars, flashing you cash, telling you they made whatever amount in X and X minutes, in 30 minutes, in 1 hour, just trading. They fund their entire life of just trading. They do this and that, and then they'll tell you, come pay for mentorship. Like the moment you see that, come pay for mentorship, you should have like a little bit of ick. You should require more confirmation, right? So this is what a lot of Forex trading guru does, and this is something that is all over the trading market, especially since the boom of technological advancements in trading, where you can anybody could pick up a phone and open a trading account. Ever since that point in time, it's been Forex guru after Forex guru after Forex guru in this market. It's killing. It is killing. They'll tell you you could make millions in minutes. You could take your $10 to $1,000, $10,000, $100,000. You can't. It's not as if you cannot. You can't take your $1 to $10 to 100, 50s, 200s, thousands. But what they don't tell you is exactly, or in fact, they don't even vaguely tell you how difficult it is. They just tell you you can do it. Pay for mentorship. You pay for mentorship, you go in there and you get disappointed. Trading is going to bash you. Really, that's the fact. Trading is going to really, really bash you. But the game here is not to come in here and make money tomorrow morning. Is what I have come to observe. You cannot come in here and make money tomorrow. It's not as if you cannot. It's 1 in 10 billion. That's the way I say it. It's 1 in 10 billion. And what makes you feel like you are the 1 in the 10 billion? So the real game here is to come in here, you take your time, learn enough. It's going to take you minimum of about 6 months. If you have a direct mentor, 6 months. If you do not have like a direct mentor with you, just prepare. It's 2 years. That's the game. It's 2 years or 6 months. 6 months with a mentor and above. Not just 6 months, like 6 months you're good enough. Nah, 6 months and above with a mentor. It's 2 years and above without a mentor. Somebody like me who doesn't have like a direct mentor, I don't have the finance for a mentor, who has been here since the beginning of this year, March, who has also been here 2 years ago for about 4 months. So put it all together, that's like a year plus, but let's just call it less than a year. And the way I look for things, it's been a whole game changer for me, noticing that you would not jump the gun. Like you cannot jump the gun. No matter how much you try, you cannot jump the gun. You need to go through that phase where you know nothing, you know a little, you know just enough, and then you start to know well enough. That's the way it is in this place. And trading it's I'll call it it's not stressful if you're doing it right. People call it stressful, it's brain damage, it's this. Nah, it's not stressful if you're doing it right. And this is why I decided okay, I think I'm going to sit on swing trading, because swing trading is way less stressful. I don't have to overthink the chart. I don't have to overcomplicate the thing. I don't have to go over and beyond trying to trace every up turn, every downtrend in the market, because within one daily candle there's a lot of up down on the 5 minutes, and every 5 minutes could cut you off. Like almost every how many minutes could cut you off on the 1 minute, 5 minutes. That is like putting yourself right in front of a chainsaw, constantly trying to dodge the chainsaw every minute, as compared to a swing trader who just puts it there. If the chainsaw hits, then it's just for like that day, and then other trades comes in. That's the difference. That's just the difference of the swing trader and the day trader and scalper. It's less mental load on the person per se. What have I learned this week? This is the first thing I really learned this week, is this. Fair value gaps. We call it fair value gaps. We call it fair value gaps because ICT completely popularized that term, or rather ICT students popularized the term. The real term is imbalance. Imbalance is a clear show of the direction of price. I've noticed it from almost every single strategy. When you find a long candle in a certain direction, even in Bernd, he is looking for long candles, which is clearly imbalance. ICT is looking out for long candles, fair value gaps, imbalance. RU is looking for long candles, fair value gap, imbalance. The only person that's not really looking out for long candles is Tori, which is trend lines, and she's just looking for a breakout from a certain trend. That is it. And those breakouts mostly come with what? Long candles. And what tells you your breakout is like very, very certain? Another long candle. It is literally all about the imbalance, the price moving with enough momentum in a totally different direction in a short period of time. That is it. That is literally what I have come to understand that the whole trading space is really looking out for. Imbalances. The point when supply exceeds demands, the point when demands exceeds supply. In the other words, the points where there's too many sell orders and too little buy orders. There's too many buy orders, too little sell orders. That is what every single trader should really be looking out for. Now, understanding how to really follow those imbalances is what makes your strategy really works. That is what I have come to see in every single strategy I have seen on the space, except for indicators and then patterns. Those ones, they are just rough play, basically. They are just rough play. But every other strategy that does not care, like it's not that they don't care about indicators, but that does not really necessarily inculcate an indicator, are solely focused on that imbalance. And truth be told, from all the explanations I have gotten from the different mentors, or rather different concept teachers and the rest, I have come to understand that truly imbalance is literally the show of direction of price. Now, this week I've learned 4 videos. Like I said, let's go back to RU. So this week I've learned 4 videos. I've learned the first thing is everybody should know the PDRA. From PDRA to marking out fair value gap and market structure, all the way to order flow, and then how one candle tells you everything. Basically, in fact, this is the basics of the entire, those 4 videos are the basics of the entire video. From the time I watched it before, with the knowledge I still have, this is literally the real basics of the entire thing, because I remember the very last video very well. So I'll give you an example of what the strategy really looks like, and the same thing with Bernd. Bernd, in fact, actually is so similar. There's a trade that Ben caught this week that made him go up to third. That same trade is a trade that you could see this particular day, it was very similar to my prediction. So when I came here, let's just put up a candle, a replay. My whole perspective was this was a draw on liquidity. My whole perspective is this is a draw on liquidity on the daily. For like, not to daily, for like monthly, or for like daily, I was like, I'm seeing price coming up, but not really finding enough strength to like push up per se. And from RU's technique, like we can find this intermediate, these short-term highs and intermediate term high holding. These are not short-term highs from here, these are just intermediate term highs. But you won't be able to detect exactly what I'm saying currently, but you will be if you are watching this concept. So there are short-term highs inside here and they are holding, and if they are holding, then we're expecting lower prices to come around here and then probably around here. And lo and behold, on the next day, you see what we got. Price really dropped down there, and right now price is giving us every single indication. It came back up, but what happened? It's finding it difficult to go up, that it returned back down again. You can see it's finding it difficult. It's still going up, but it's finding it difficult. And from the way I see it is, if I should jump down into the hourly, if we find, because right now we're literally having like a clear show of buy orders, right? A clear show of demand, but it's looking right now to me, it's literally within a supply zone, because this candle is in 1 hour is no joke, and it was a news candle obviously, but it's a no joke candle, and it tells you a lot of supply went on, a lot of sell came in around here, which is what Burn teaches. A lot of sell came in around here, aka it means that, it means that a lot of things are gonna happen down here, like when price should make its way. You can see prices coming from here, goes up, comes down, it's going up. From this point on, if we find any form of clear show of supply starting, like too much supply, that price starts to go down too much, just know it's coming for this point. There's no other excuse. It's definitely coming for this point. If like I said, the moment you start to see that 1 hour candle prints down too much consecutively, 1 2 3, you see this extremely big candle with a clear imbalance, you just know it's about to come for this point. It's not going to be returning back above that position where it starts doing that, and it's going to come till it gets here. It could get here and find enough momentum to start going up again, but it is likely going to hit here. First probability is this, so I'll say 0.1. This is 0.1 or target 1, and then this, my dear friends, is 0.2. So this is, like I said, it's all probability. Now that the only probability that this will happen is the moment we find, you can see this clear candle right now, this one right here. The moment we find something like this, but for the sell side, meaning for a short, when we find it coming down like that, like I said, if we find it coming down like that, we have 0.1 and 0.2. But let's just see how next week goes. This is a little bit of what I've learned. I'm still watching the market. I've not started trading anything. You can see that it's still $10,000 balance. I haven't placed a single trade in this place. The account I opened, I don't know if the demo account will go off, because I think they close the account in 2 weeks if you're not active, if you don't use it. But I just use it to look through things. I was supposed to show you guys my Notion, so I think let me just quickly put that in here. The video is getting quite long, so this is the first one. The main purpose of watching this video is to understand that price moves from PDRE to PDRE. Then market structure, which is the second video, tells us that we're trying to understand the movement pattern of price and how it delivers to its target. So price is always having a target. Not really that it's having a target, but it's always moving in a certain direction, and how it's going to continue in that direction is what we're looking for. The third one is order flow, which is exactly how the price moves. It's just the intention of price. And then the fourth one is about candle signs, which tells you order flow, market structure put together inside one candle. I think if you're a Forex trader, you don't know of candle signs, please, you should just go out there and learn it. Go look for some tutorial. It's everywhere. Just go onto YouTube. You can go onto YouTube, you just search candle science, one candle science. It doesn't have to be from IU, it could be from anybody. Candle science. it doesn't really have to be from Ayo. It could be from anybody. Oh, sorry, that should be in Forex or in trading, basically. Yeah, so I would mostly find Ayo because, you know, I follow him a lot and I watch a lot of his content, so I would mostly have Ayo. But in your case, you would find like other guys that have taught candle science before. There are so many of them, and you will understand exactly what I'm talking about when I'm talking about candle science. It is something that would really make you understand what I'm talking about when I say candle science. It's order flow and market structure in one candle. So they will tell you decision, like Byrne calls it decision, indecision, and explosive. In Ayo, it's called respect and disrespect. I think ICT still uses similar terms. I think it said, I don't know if he has similar terms. I never watched ICT long enough. I didn't watch up to 2 episodes. I just watched the first one and I gave up. Like, man, this guy is rambling. Because I watched one video. I watched that one episode like 4 times and I'm not getting it. The guy he's just distracting. On his own, he is distracting. So I cannot steal such a person. Like, I cannot learn from such a person that self-sabotages his own, you know, spread of knowledge. So, well, this is all I've gotten this week. The whole update, what I've learned, what I've come to understand. So for those of you who think fair value gap is nice, for those of you who think fair value gap is bad, you could leave a comment in the section below. I want to see your own opinion. I want to hear your own opinion. I want to understand. I want to see where you get it from, how you think of the market. If you think Forex is still gambling, I think you could also still drop a comment there. Whatever you want to say, you could drop a comment. I'd love to see your comments. But with this, I'd like to say this is the end of today's journal, and starting from tomorrow, I will be giving you guys focused journal right now. Like, I'll start focusing more on what I learned yesterday, what I learned in the past 2 days, what I learned in the past 3 days, specifically that. And maybe after the journal part, then we can now have a little bit of ramble left and right. But thank you all for watching, and catch you probably some other days from now, about 2-3 days from now.